Cyprus official corporate tax is 12.5%, among the lowest in the whole EU. But what if I told you that there is a way to lower your corporate tax in Cyprus another 80%? Hey everybody, it's Ricardo Gorski, the founder of Tax One, where we help individuals and businesses relocate to low tax jurisdictions. And in this video, I'm going to talk about the IP Box regime in Cyprus that reduces your corporate tax from 12.5% down to 2.5%. But there are some very important things to consider, so definitely watch the video until the very end. So yeah, Cyprus corporate tax is 12.5%, and there are some rumors that they will increase the corporate tax to 15%, but this is not official or confirmed yet. In my personal opinion, if this were to happen in the near future, then only for big businesses that generate millions and millions in revenue. Actually, there is even an international tax law specifically designed for multinational enterprises that avoided billions and billions through tax havens in the past. I don't really see this coming for small and medium-sized businesses. Yes, there might be the global minimum corporate tax anytime in the future, but for now also this is not really official. And other than that, I don't really see a reason why Cyprus would suddenly increase their corporate tax. Cyprus needs to stay interesting for wealthy individuals, for businesses that want to relocate here, because Cyprus itself is a small, cute Mediterranean island with not many business sectors. Sure, we have tourism and a little bit of agriculture, but the country is heavily dependent on foreign investors. And that is why Cyprus offers a lot of benefits and advantages when it comes to IT companies and software companies relocating to Cyprus. Number one, tax deductions and exemptions. First, of course, the IP Box regime, which is the topic of this video. The IP Box regime as of today was introduced in 2016, which focuses on intangible assets, which we will talk about in a minute. Basically, the IP Box regime means that qualified profit from IP assets in a Cyprus limited company can be subject to a lowered corporate tax somewhere between 12.5% and down to 2.5%. The exact percentage depends on a few factors that we will discuss in a minute. As a general side note, the good thing about the IP Box regime is that it has been reviewed and approved by the EU Code and Conduct, which basically means that it is 100% compliant with the EU standards and 100% legal. And now, another benefit that the Republic of Cyprus offers for businesses relocating to Cyprus is the income tax benefits. Foreign talent that relocates to Cyprus enjoys a 50% income tax deduction. And this is obviously not just a benefit for the employee, but also for the employer, because they also pay less in tax. And on top of that, another benefit that Cyprus offers is the option for citizenship. Not via investment anymore, but via naturalization. Especially for talented and highly skilled individuals, it's possible to gain Cyprus citizenship in as little as just 3 years. And on top of that, the benefits are the networking opportunities and the entrepreneurs community, which just creates a business environment on the whole island here. Cyprus even holds one of the biggest tech and entrepreneurs events in the Mediterranean area, which is called Reflect Fest, and I'm also a speaker there, and Tax One has a booth there. So that's the benefits that I wanted to mention if you're into IT. And now let's get back to the IP Box regime. So as said earlier, the IP Box regime in Cyprus offers tax incentives under specific conditions for income generated through intellectual property. And this specific regime was designed to incentivize innovation and research and development. Cyprus actually wants to be known as the tech island, as the island where innovation happens, where startups come together and where beautiful products are being developed and created. And a big misunderstanding and misconception that we see a lot of times is that when people are into IT, they think they are eligible for the IP Box regime by default, which is not the case because, for example, service providing is not eligible for the IP Box regime. Also, income generated without an IP is also not eligible for the IP Box regime, logically as the name says. So typically, qualifying assets for the IP Box regime are patents, software, and other IP assets that are legally protected. And another side info, these assets can be registered in Cyprus, but they don't have to necessarily. We can create a structure where the IP asset is somewhere offshore. Also, research and development can be done in-house in Cyprus, but it doesn't need to be. Now, what's very important when it comes to the IP Box regime is the so-called Nexus approach. But this can be quite complex and very individual, so I'm just going to touch it very briefly so that you get a general understanding. And in any case, we always suggest to get an individual consultation call, and you can reach out to us via our website tax.one. The Nexus approach, or also the Nexus fraction, is a way to figure out how much of the income of the company is actually qualified for the tax deduction, and that ultimately then leads to the actual corporate tax and percentage. So in the IP Box regime, the qualifying profit, the QP, is the profit that is eligible for the tax break, because not all revenue is actually eligible for the 2.5%. Alright, now we have to concentrate and let's take a deeper look. To identify the qualifying profit, the QP, we have to take the overall income, the OI, from the asset, so all the money generated through the IP or through the asset, and we multiply that by the sum of the money spent directly on the asset, the QE, which is the qualifying expenditure, and then any other additional necessary costs, which are the uplift expenditure, so basically non-qualifying expenditure, UE. And then we divide that by the total money spent on the asset, which is the overall expenditure, OE. And that gives us the fraction of the total income that counts as qualifying profit. It's basically just a formula that decides how much tax and percentage you will pay. And the formula looks like that. And if that was a bit complicated, I'm sorry, but that's why we always say to book an individual consultation call, so we take care about the complicated tax stuff and you can focus on your business. And you can reach out to us on tax.one. Now, what's more easy to understand and what's actually more interesting is what actually are qualifying profits. To give you some examples, qualified profit can be, but is not limited to, royalties from certain assets, subscription models, marketplace fees. To make it even simpler, let's take a very good example, and that is eBay. eBay's brand name and logo are protected by trademark laws. At the same time, eBay's website, design, software, and even the written content on the website is also under copyright law. And of course, eBay holds a software and patents for their technology when it comes to online auctions and marketplaces. Now, eBay has various different income streams, but some of them are directly tied to their intellectual property. Let's look at two examples. Number one, the listing fee. As we all know, as a seller on eBay, you pay a fixed listing fee in order to be able to list your product. The technology that is being used in order to do this action involves patented software, and so this makes the listing fee reliant on IP, and thus it is QP. Now, number two, the commission fee. After the product has been sold, then the seller also pays a commission fee to eBay, which is dependent on the sales price. So while the insertion listing fee is QP, commissions more often than not are not. But again, we highly suggest to book an individual consultation call so that we can examine your individual IP and tell you what is applicable and what not. And also, eBay of course also has qualifying expenditures for the IP Box regime that includes all research and development costs that are directly associated with the development or the improvement of the marketplace, or rather their intangible assets in general. And now, for all of that to work in the first place, the most important thing is that the company is actually a tax resident of Cyprus. And that is usually determined on where management and control is being taken place. And this is usually determined by the location of the decision makers. If the board of the company doesn't reside in Cyprus, then the company definitely must maintain economic substance in Cyprus, which can be accomplished through different ways. Hiring a local director, but this local director must be involved in decision making. He must exercise management and he must have control. Employing staff in Cyprus, paying their social insurance, and ideally also maintaining a physical office. And then also ideally relocating senior executives of the company to Cyprus. Interesting enough, up until 2018, Luxembourg actually had one of the most popular IP regimes in the whole world. But after they revised it, Cyprus offered a much better IP box regime, which is now one of the most popular ones in the EU, if not in the whole world. And now to close the circle, I will show you an example of the 80% notional deduction, which is another term in the world of the IP box regime. Let's look at this example. So, our overall income is 2 million euros. The overall expenditure is 1 million euros. The qualifying expenditure, because we are doing internal research and development, is 1 million euros. We have some uplift expenditure, but nothing really worth mentioning. And now our beloved formula, and that is QP equals OI times QE plus UE divided by OE. In numbers, that means 2 million times 1 million plus 0 basically divided by 1 million. And so the qualifying profit for the 80% tax deduction is 2 million euros, and that means that the taxable profit will be reduced by 1,600,000 euros, and so the 12.5% corporate tax on the 400,000 euros that are left equals to 50,000 euros in corporate tax, in tax liability, which is then basically 2.5% in corporate tax effectively. Okay, that was definitely a marathon, but I think you get the point by now, because actually, at the end of the day, the corporate tax stays at 12.5%. The only thing that changes in the IP box regime is the taxable profit. And with different numbers in our formula, we end up with an effective corporate tax anywhere between 12.5% and 2.5%. I hope this video gave you a better understanding about the IP box regime in Cyprus, and if you want to relocate to Cyprus, definitely visit tax.one and book your individual consultation call, and I will see you soon.